So we have a special episode of Agronomics today. Agronomics on tour. We are at the Grain Market Outlook briefing of 2024, whereby we have had farmer levy payers and merchants, traders, supply chain, businesses come together to discuss what is driving cereal and oilseed markets. We've been looking at the global and domestic side of things, as well as having a presentation on the impact of SFI and how we think that would potentially not impact food production as much as may have been previously thought, as well as a very wide range discussion looking at policy, agricultural budgets and the requirement for a land use framework. First off, I'm joined by Helen Plants and Olivia Bonser from our cereal and oilseeds analysis team, who went through what's happening with the global markets and the domestic markets. So Helen, if I come to you first, because you covered global markets today, you were the first presentation on this morning. What was the key things from your presentation? What are the key things that we're delivering in our grain market outlook for this year?
We've actually got relatively weak growth in global demand for grains this season. That's across all grains, not picking anything out in particular here. And that's linked to the sort of weaker global economic outlook at the moment. But even this sort of limited global demand growth is exceeding production this season and tightening up the market. But while that's offering potentially some support to prices, there's a lot of watch areas, and the weakness in the demand forecast is also a sort of key watch point. So there's some upside potential, but perhaps more than downside, but it's on quite a sort of shaky foundation.
So if that's the world of grains and the headlines then, Helen, how does it look from an oilseeds perspective?
The headline from an oilseeds perspective is around not only the smaller global rapeseed and sunflower seed crops this time, but also tightness in palm oil supplies as well. And this whole tightness in vegetable oil markets, with increases in demand projected for next year from biodiesel markets in Indonesia, it has the potential, is offering support at the moment to rapeseed prices, and has the potential to keep that going for a little bit as well. Some of that gains is limited from quite ample supplies of soybeans coming forward. But as ever, there are watch points with markets. We rely on the weather. It wouldn't be the same without it. And then when we look a little bit further ahead, we also took a headline look at some of the things that could change into 2025 as well.
So we've heard a lot from on the global side, Helen, and we're going to talk about the domestic side as well as SFI, etc. But I suppose for a levy payer listening, fear not, you haven't missed out. There's more events coming up through November where levy payers can engage with this information, isn't there?
There is, absolutely. We've got a webinar on Thursday the 7th. So if you're available, please join us for that. We'll be covering a lot of the same content as we have today. We're also going to be at AgriScot on Wednesday the 13th, and that'll be Olivia from AHDB's side talking about malting barley markets, but we're also going to be joined by special guests from Bort Malt and SQC, looking at the green requirements that are coming down the line and what role assurance can have in helping us the industry to meet those challenges as well. So that's looking like a good event there if you're available to join us.
So that was the global outlook. And Olivia, if I come to you now to give a domestic view, we released our latest balance sheet in the last couple of weeks, looking at the supply and demand domestically for grains. What are the key headlines on that perspective? You know, within our borders, what's happening for the grain market?
Yeah, so I sort of opened up the presentation by talking a little bit about supply for the 24-25 season. So sort of we're heading into the new season with quite heavy stocks, but actually given the sort of lower production year, especially for wheat, we're left with sort of a tighter balance once we bring demand into that equation. So on the demand side for wheat, we're expecting a bit of decline in demand, but actually the reduction in supply offsets or outweighs the reduction in demand. And so because of that, we're left with a much tighter balance and a much smaller amount of grain left for sort of either export or free stock at the end of the season. And similarly on the barley side, we're left with a tighter barley balance, even though we've got slight improvement in supplies this season compared to last. We're expecting to see a bit of a climb in the demand side of things, which, leaves that tighter balance. So I think they're sort of the key points from the S&D side.
Another one of the, I suppose, key topics that was discussed today was around the importance of robust data. And this isn't just singularly we're talking about data in terms of prices or supply and demand statistics, but this is across all levels of data. Because I think it's very clear from a supply chain perspective and from a farmer levy payer perspective that data drives those decisions, and we need to make sure that that data is as robust and transparent as it possibly can be. And it's something you mentioned, Olivia, at the end of your presentation when you were talking about the work that we as AHDB are doing, helping to support and develop some of those supply and demand statistics that we produce.
Yeah, so I think it's important just to outline, after having spoken about our supply and demand, what we're doing to improve that data and make sure that it's as accurate and robust as possible. So I've sort of spoke a little bit about our audit function group, which is a group of us that meets a few times a year just to talk about sort of the key development points or development needs that are needed for that data. So a couple of things that we're looking at in particular at the moment are improving sort of area and production data, and doing that we want to focus on new technologies, so looking at satellite imagery, for example, as a way of doing that to sort of replace or at least complement those older data collection methods. We also want to have a look at sort of timeliness of data, so whether that's looking at trade and how quickly we can get access to the trade data, for example, and also just a little bit about reviewing surveys. So, for example, this season we're going to look at reviewing our merchants, ports and co-ops survey. I think especially as we're sort of relying on imports quite heavily at the moment, it's important that we sort of know what's being held in the ports and by merchants at the end of the season, and also sort of liaising with DEFRA a bit as well on some of this data, making sure that their surveys can be as accurate as possible and promoting their surveys ourselves to ensure that there's a big enough sample for that data as well.
Great, thank you for that, Olivia. We're now going to take a short break in the middle of this special Agronomics on Tour podcast, where we're going to get the latest from what's happening in the markets. And when we come back, we're going to be talking to my colleague Amandeep about the impacts of SFI, as well as a couple of our special guest panel members talking about all things policy and budget.
Hi, I'm Olivia Bonser, Senior Analyst at AHDB, with a look at grain and oilseed markets for the week commencing the 6th of January. Despite some support in wheat markets over the Christmas period, prices have been under pressure in the new year from a strengthening US dollar, technical selling and sluggish global demand. However, Russian wheat crop conditions remain in focus, with warmer than usual temperatures and excess moisture in key growing regions. Persistent hot and dry weather in Argentina is also raising concern over the country's maize crop, which is now in its critical development stage. For rapeseed, new crop prices are supported, with doubts over prospects for global rapeseed production in 2025, though forecasts of heavy soybean supplies from South America limit any major price increases. Over the next few weeks, weather in major exporting countries such as South America and Russia will be key in driving prices. The USDA will also release updated global supply and demand estimates at the end of this week. To stay up to date with the latest data and analysis across arable, red meat and dairy markets, head to hdb.org.uk and click on Markets and Prices.
If you're in the market for another podcast to subscribe to, then look no further than our Manager's Special, AHDB's Food and Farming podcast. Recent episodes include a consumer insight offering on red meat labels and supermarket aisles, as well as a dairy special about our work with retailers to promote milk. If you're after herbs, or rather herbal lays, our shelves are stacked with sage advice on how to introduce lucerne and clover into your fields. In fact, we cater for all tastes, so you'll find sections dedicated to all sectors: pork, cereals and oilseeds, dairy and beef and lamb. And don't forget our middle aisle, where you can often pick up a bargain episode you didn't know you needed to listen to. Search Food and Farming wherever you get your podcasts. AHDB thanks you for your custom.
I'm going to take you through the analysis of evidence.
So for the second half of our special Agronomics at the Grain Market Outlook briefing this week, I'm joined by my colleague Amandeep, who gave a fantastic presentation earlier on today looking at all of the aspects of SFI and how that impacts on food production. So Amandeep, over to you. What were the headlines from that presentation that you gave?
The key point was that there was concerns that the SFI was going to take a lot of land out of food production, but what we've seen from the evidence and analysis that we presented today is that it's unlikely to take large swathes of land out of food production, fundamentally because it's detrimental to a farmer's net profit to take productive areas of their farm out of production, to sacrifice that crop area for SFI area. Also, it makes more sense to use these to do the SFI land requiring actions on the less productive areas of the farm. And in the future, the whole aim of that is to then make those areas, unproductive areas, more productive in the future, that give you, provide some return in the future. We've also seen that typically, in terms of looking at how much land overall will be used for the SFI, at the moment there's roughly between 5 to 6% of uncropped arable land, according to the stats, and then we'd expect most of that to be taken up by the SFI. Of course, we've got countryside stewardship, land and countryside stewardship to come out of those agreements that will go into the SFI. On top of that, then we're looking at potential 1 to 2% to go into the SFI as well, based on further application of the SFI, problematic crop areas. If you have problems with crops, that might be potentials also there as well. Also, we're going to looking into the future. We're going to look at the unknowns. We've still got some unknowns at the moment. So we've got good unknowns, which is how is the SFI going to benefit the land in terms of the soils? Will we get higher yields? We can get more productivity from the land in the future. But also there are some concerns or some unknowns, as in will some of these actions add to a higher weed burden, and what are the sort of potential agronomic effects on crops from that?
I mean, the key thing from what we've heard today, and I guess the key worry and concern from a lot of the supply chain participants today was around that longer term impact on production. And what we're saying is actually there isn't going to be that huge impact on production. It isn't as if there's suddenly going to be a massive drop in the wheat area that's going to lead to a supply chain shortage, which I think is a good thing. And I guess from our perspective, what we want to make sure going forwards is that is then communicated and understood. And from a policymaker's position, we then kind of review from where we're going.
Areas of interest that we have in particular is when you look at
So we've just heard from Amandeep, who was giving the view of the analysis that we've done on SFI, and now we have James Webster Rusk and Ed Barker from Andersons and AIC respectively, who gratefully stood into our panel today to talk about the wider view of policy and SFI and budgets, etc. And there was a few good points that were made, James, specifically about banking and bank lending, and if a bank would see farms being more favourable because it was in SFI, and is that something you agree upon?
So I think the question was poised from the sense of farms guaranteeing a consistent income stream through a land use change option. But I think SFI potentially signals something wider than that about the sustainability or the views on sustainability from a farm. If you're looking at cover cropping or looking at no-till, payments like that, precision nutrient application. And we are seeing the view of favourable lending potentially coming in down the line as a result of things like SFI, and it potentially acts as a useful signal to banks about the environmental resilience of a farm business and potentially favourable from a bank's perspective.
And Ed, one thing that Amandeep said was around the land use change, and potentially there could be up to 8% of croppable land that is now no longer being used for production. I suppose from your perspective, from an AIC perspective, is that something you see as a risk, and what are the longer term things you're looking at from SFI?
So the main feedback we've had from members so far is that now that we're 3 or 4 years into the SFI process in full, it's actually what it means on the farm in year after year. So we can focus on the immediate land use change of a single year, which the data showed was relatively limited. However, the interest in what the industry is busy I think reporting at the moment are actually potential agronomic impacts years after a particular option has been in place. We saw today quite where the drop is in terms of area under pulses and oilseeds, and there are discussions about what does that mean for weeds, for disease, for resistance, and what does that mean for the cropping rotation if you are choosing options like legume sown fallow that could potentially act as a replacement for traditional pulses. And if we can have that longer term data that shows the potential knock-on impacts to the crop, then I think that really helps inform growers for their decision making for future schemes like SFI, however that may materialise in the future.
And if I could ask you both, just I suppose, what your key takeaways from today are of everything else you've heard. Is there anything specific that you've heard from the event today that you'll take away for your next days in business?
I think it just highlights the complexity of the scenario we find ourselves in. We can't necessarily keep saying that grain markets are volatile either. I think that's a really key takeaway. It is the new norm, albeit there's plenty of geopolitical volatility coming ahead, and farms have got to look at how they manage that from a business and financial resilience perspective.
I was really interested by the analysis on margin of particular SFI options against traditional cropping alternatives like oilseeds. The room, I think, were all quite surprised by how low the actual margin was on a number of SFI options. There's a perception it's much higher because people see the payment rates, but in comparison to, say, a favourable year in oilseeds, it was absolutely it was completely unambiguous how much more a traditional oilseed crop makes more in gross margin than an SFI option. But when you're presented with that as payment rates, that isn't always the case, and I think that's extremely helpful as a way of being able to understand the viability and the potential costs involved.
Great, thank you both, and especially thank you for being two Ipswich fans that haven't lynched a Leicester fan in me after the result at the weekend. So that is a wrap for our Agonomics on Tour special this week at the Grain Market Outlook briefing. Everything that was presented and discussed today was actually recorded, and those recordings are going to be made available on the AHDB website, and we'll promote those through the Market Outlook publications as well. As Helen mentioned earlier on, there's further events upcoming. So we have a webinar which would be tomorrow, Thursday the 7th of November. You may have missed it if you're listening to this any later, but fear not, there will be more. We will be at Agri Scotch giving an update on the Scottish malting barley market, and then later in the month as well, in a separate event, we're going to be giving Market Outlook presentations and SFI updates at CropTech. So lots of events this month from an AHDB perspective in cereals and oilseeds markets, and we hope to see you there. And thank you to everyone that attended today for your engagement and your energy and your participation.